The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. My opportunity now to have an hour, and we just had a fantastic 2 hours. First hour was with Steve Rose, always just so informative, and of course a great session with Tom and Steve together. Tom made some fantastic trades with his NYMEX, and congratulations. This is a very important moment, and I'll explain why. In the market, there are certain parameters that I'm looking at that could dictate at least next week's parameters by the close today. And if they dictate next week's parameters, they could be going 2 to 3 weeks out. Now, even more important than that, there are certain aspects that have, I'm not sure I should call it traditional, as if it always happens, but it happens enough times that I feel fairly confident in saying that it's the aspect we need to look for over the next 3 sessions. I'd even include the end of the day today, even though we've done about almost, an hour and a half today. But in looking at the technicals, and of course this being Friday, it is Technical Friday, and that is we look at the ChapmanWave in much greater detail than normal. And I'm going to show some chart patterns. Let's go through this just step. Imagine right now you have no positions on. You're neither long or short, and you're looking at this market freshly. So let's do this. Let's go through the different sectors one at a time. And I have to tell you, talking about sectors, I understand it. I should not be receiving all these things. But over the last 2 weeks, even though I've got 2 barriers to my email, I've been getting just tons and tons of these emails about collecting the money that I won at this ATM for millions of dollars. It used to be Nigeria, now it's all over the show. And I'm just saying, is this another flood? I'm not sure why they're even getting through my barrier there. So I just brought that up because, of course, there's a lottery going on. I actually don't ever play the lotteries. I don't know why, but I just don't. Let's go through the numbers. In the Dow, and I'm going to start off showing a chart that I've never shown before. I showed it to subscribers this morning. I look at this particular set of parameters, and the parameters are set by just a very simple thing. It's the 714 crossover. It's called, in the trade station, it's called moving average crossover. MOV, AVE, crossover. It's in the section with, let's see, paint bar. Okay. So it's just very simple. I tell you why I don't use it all the time. I like to just use it as kind of a reference point. It's because though it always looks unbelievably good, the times that it's wrong, and if you're looking at Tiger TV, and of course this is archived in Tiger 11, if you want to go through it again, what it shows is the green for up and red for down. And look at this. Yeah, sure, it showed beautiful greens, but when it went, it was still red from Dow on November the 25th at 11,231 all the way to the change of color at 12,185. So that's a lot of points to set out before it goes back. But that wasn't really the point. The point was to show as clearly as possible, and I'll expand this right now, how reference points, I like to use reference points and say, okay, looking vertically at the MACD, the moving average convergence divergence, 12, 26, 9 are the parameters that we use. 12 and 26 makes a 9-period differential, and that yellow line is the 9-period differential. and the slow stochastic. Now, this is something I do in my Master Trader series of my webinars, but I don't often mention it here because it's just, there's some stuff that you just do over and over and over. It's kind of, it's like when you play a musical instrument, you don't say, let's see, left little pinky finger for the C sharp with the 3 fingers down, if you're playing the clarinet, you just do it. Now, look at this. Back in October 27th and 28th, when the Dow was making a high at 12,284, 12,251, the MACD and stochastic were acting beautifully. But when it pulled back and then had a retracement to just underneath that previous high at 12,187 on the 8th of November, look what happened. The MACD was just about to turn down, and the stochastic was having a much lower high bar, and there's the pattern that I call the dreaded H. Look at the yellow line. Looks just like, I'm going to expand it. I really want you to be able to see this. That yellow line, the yellow line, this is the slow stochastic with 1, 4, 3, 3, 1, and 20% down there is when it goes under 20%, 80% at the top. Remember, I like to say that as long as it's above 80%, that's not what you read in the books. My rule is that as long as the stochastic holds above 80%, see how it failed back in October, September? The stochastic went just above and within 3-4 bars, bam, back down again, very negative. Now look at this. When we're looking at the slow stochastic, right there on the 8th of November, it's way down, and then there was another retest, and the stochastic was even lower. And that's called a deflection, when the MACD deflects lower. That's just negative action. So I'm saying to myself, okay, if that's the reference point, and then the Dow went from the 12,284 level down to 11,231. I say to myself, aha, isn't this very much similar? The Dow's gone up to the high of 13,253, 2,289. MACD breaks out, stochastic breaks out. Then the stochastic drops under 80%, and it's still only at 69%. The MACD is deflected higher. And look, when that retest 4 days ago, when the Dow went to 13,264, it's basically failed. I'm saying to myself, there's a really good chance that the upside right now, from the way it appears, should be fairly limited. Yes, you could go and retest or even make a nominal new high. I don't think it's likely at this particular point until we get some kind of a pullback. Now, talking about pullbacks, I'm not going to give you a downside pullback now until we go through this whole exercise. So that's the most simple way of looking at it. This is the price to the upside. Now, what's happened is you've come down. Yesterday you went down to the 13,032 level. Did not break the 13,002 low bar of a week or so ago. That was very important. Had a real nice snapback. We've got to wonder how much this is end of month buying, they've got the end of quarter buying, you've got all this stuff going on. I tend to put that aside. I've seen enough times over the years where suddenly at the end of the quarter there's a huge sell program, big sell programs. So I say, yeah, it works when it works and it doesn't work when it doesn't work. So let me look at other factors. Let's go back to the Dow, my very simple chart that I show subscribers every single day. And you'll see that up until this point, the Dow has been wavering in like a sine wave. There's that red line there. That's the 9-period exponential moving average. And as simple as this chart pattern is, you got your cup and ladle, you break out, you go to the top, you pull back, you retest the lip of 13,055, you go underneath. There was, you remember last week I spoke about declining wedge formation. You spike to the upside, you cannot make a new high, you pull back, you haven't made lower lows and lower highs, but there is this pattern that I call the dreaded H, which says that if you are going to make that, once you turn down, you don't want to hang around too much. You can start to make an M pattern, or you can even retest the previous high if you don't take out the left side low, and that's 13,002.77. So far, everything says on this very simple white candle, black candle background with a white background, you've got a positive action and reaction from the dragonfly, or you can call it a dragonfly doji of yesterday, and you gapped up and you've held very well so far. Okay. Now, there's another way of looking at it, and it's this way here. In the ChapmanWave, no, this is the one that I use, just no notation, nothing. What I'm showing here is that there was a beautiful up channel in the Dow that has been maintained and is still being maintained. Within it, that dashed line, I'm just giving you a little click there, you can see it. This dashed line says, okay, you've held it, you've gone into the supposedly what I call a buy zone. It's held in that buy zone, and it's pushed to the upside. But we're starting to make how can I put it? We're starting to make from the January high of 12,764, somewhere around there, you started to make a new trend line, and that blue line shows you that there's a tremendous resistance area, and that resistance area, if I don't like to make things too complicated. If I do, I can't do that, it's disappeared. If I had to put another trend line just below it and called it the inside track sell zone, that would take you to about 13,357. I'm saying that at this particular point, the parameters are really clear for me. If there's a very strong close today, and I said to subscribers, I suspect a much smaller candle today than the one we had yesterday, and that it's probably going to be a large candle on Monday, either up or down, that really gives us parameters to watch. Let me put it this way. If the Dow closes nicely to the upside today, and on Monday there's a very sharp move to the upside, and it takes out the high of the 27th of 30,264.98, that says we could in fact work our way all the way to this trend line top, which I said the actual trend line itself, not the inside track, but the trend line next week comes in around about 13,430s. So I see fairly limited, if you want to talk about 200 points or so to the upside on the as that's where you get very strong resistance. But now we can talk about the downside. If we reverse by the end of the day, and maybe all the selling's already done, who knows, but if we reverse by the end of the day, and what happens is if on Monday there in fact is overnight, there's a gap on Sunday night, and the futures are down 10, and all of a sudden we take out 13,000 as support by Monday or Tuesday, then this red line, which has been fantastic support, all of a sudden says you close underneath it. You close anywhere, not you, the Dow closes anywhere in the 12,950s, and now you've got tremendous resistance, and we'd be looking at the low of 12,734 as a target to the downside, as the next target to the downside. So I hope I'm trying to be as clear as I can in chart patterns. I haven't used much of the ABCs of the ChapmanWave. I want you to just articulate that. We'll be back straight off this Basil Chapman Technical Friday.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everybody. Now, there are 2 stocks that I need to go through. One is Apple, and the other one is one that I seen shown earlier. I wasn't sure how it was discussed. I just saw the symbol SWN, so I thought I checked it out, and I did some work on that. So those are 2 stocks. I want to do 2 things first. I want to look at the indexes that are most important, and I want to discuss them. I discussed the Dow, the S&P SPX.X. Now that has I've got a peak C. The technicals are not so great. It's holding above the 9-period exponential moving average. 80% for the stochastic. That's good. It says there's a chance that by Monday or Tuesday, if this is a strong close today, we could go above to the 1420, maybe 1421, 22 area. However, and I'm looking at this, so this is E, and that's an F, and that's a rogue wave G. Just let me do this for the 120-minute chart. So this is there, and that goes to a G. So what I'm looking at is that, and the reason why I really cannot get too negative, I'm looking at short-term. I'm looking at the possibility of a short-term corrective action based on some of the very strong triple-digit stocks that are starting to show signs of deterioration. But this is what I'm also looking at, that the weekly charts still at this particular point are really strong. And unless we close down really sharply today, the monthly chart of the SPX and leg E, remember I showed yesterday, I showed the other charts of the S&P, the monthly chart just with simple channel lines, drawn a little differently to the one that's drawn here, but it showed that there's still a lot of strength there. Now this is very interesting because there's a chance that we would be making a pattern that I call an oval pattern in the S&P. Now, the SPY's gone to a peak D, and that's very interesting. I've got diverging ETFs and cash a difference between the different indexes and the ETFs. So this is going to be interesting. There's a pattern that I call a stalk leg. So you have a ChapmanWave stalk leg. So you got from 1340.23 back in early March, you've got this very strong leg. It's gone to, let's call it a peak C to be as absolutely strict as possible on this, to 1490. Now, if you do not break decisively below 1386.87, the low of the 23rd on the S&P, cash, it can turn around and make this oval pattern and then break to the upside for the neck, going to leg D, or even it could be an E at above 1419.15. So that says those are my parameters. You break under 1388. Let's call it 1380. So it's 1386 on a close. That's not good. You break above 1419.15. That's good, and I'm sure at that point the stochastic goes back to about 83%. The MACD might be turning up. Those are the parameters. Look at the Qs, 1, 2, 3. Yeah, I always say 1, 2, 3, and 8, 4, because I always used to be 4 of those things. Now the Qs are acting a little weak today, although they're up 4 cents, but yet they are still above the 9-period exponential moving average. MACD's just turning down, stochastic's turning down, but they're still holding in very strong territory. Look at the weekly chart, just a series from the 23rd, the week of the 23rd of December. There's not been one single week that had a lower high bar. This is all an extension leg E, perhaps even an E/A. So I'm looking at this and I'm saying no technical weakness there. So, and the monthly chart is bumping into that resistance that I spoke about ages ago, where there was I drew this channel, really it was about 2 months ago, and it went all the way up, and then it started to extend. And I said, wow, that makes this green line here, a close decisively above the green line, that would be above 69, let's call it, would be very positive, at least for the short term, meaning short term monthly, another month or two. But if it pulls back from here, then you're right in that inside track. So that's why I'm saying this is a very important period over the next 3 days. Why? Because we have very specific parameters that say, if such and such happens, let's go to the IWM. It's been one of the weaker indices, and yet it's still holding very strongly in the weekly chart, and the weekly chart is in leg E, above the 9-period moving average of 81.54. MACD is still holding well. It's making that dolphin formation. And the stochastics at 89%. But look at the daily. The daily stochastics at 72%. It's made a peak D. It's struggling here. That says, I could do the same thing. I could do this oval pattern right here, right there. And I could say, here are my parameters, very clear. The IWM, you close above 84.66. Let's call it, you close above 85. Very positive. You start to break below the low of yesterday, 82.01, and you're going to be retesting the 81.25 level. Now, I also want you, so that those are the indices that I want you to look at. And also the SMHs, as we go out, SMHs are acting pretty darn well, holding the 9-period exponential moving average. Then I want to look at some of the currencies and bonds, and then I will take your questions as we look at those charts that I wanted to talk about earlier on. We'll also be back with Chris in San Antonio.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman here. Just as we're going to go to our first caller, I wanted to show this chart because I didn't hear what was going on, but I did see this chart of the IWM. I think it was a 10-minute basis. I quickly grabbed it, and I wanted to show in the ChapmanWave, the IWM Russell 2000 iShares made a low of 82.01 at 11:40 this morning. 11:40 this morning. Wait, it's now 11:40. That doesn't make sense. Well, it made it this morning at the low 11:40. Wait, that's 20 to 12. We're only at 25 to 12. Whatever it is, it was right there, as you can see in the chart. Yeah, 11. Right, at that point. And then if you just merely count each successively higher peak and look at that 9-period exponential moving average, the white line, you can see it very nicely here on Tiger TV, and look at the yellow line, the fast moving average of the MACD, and look at the stochastic, and then look at the on-balance volume. It goes peak A, B, C, D, E, F. Where does it make a peak F? The 2 bars before, that's the warning. This is the way you can learn how to use the unbalanced volume. And it gives you a peak F top. You know, in the ChapmanWave, you go from A, B, C, you can go to D, E, and F. And all the time, there was no down signal, so the down arrow perfectly on the bar after peak F, and it pulls back all the way from 83.61 down to the low of 82.53, and now it's bounced very nicely with resistance at the simple moving average of 83.30. I just wanted to go through that to show you how nicely you can use the ChapmanWave ChapmanWave in almost any time frame. You could do it with, using it on options, charting the options, whatever. Now we're going to go to our first caller who's patiently waiting, and we've got Chris in San Antonio. Hi, Chris, how are you?
I'm doing good, Basil. Hey, I called you a couple of weeks ago to talk about United Healthcare.
Right.
And you had mentioned at the time that in the weekly and the monthly it was in peaks, E and F, or F and E, I can't remember.
Right.
But that thing has just exploded in the last couple of days, and I was wondering if the market is close to a short-term top, would this be a good time to short this thing?
Wow. Okay, folks, we're looking at UNH, United Health. United Health Group. UNH is the symbol. It's at 5909. Now, what I had also mentioned at the time, if you remember, I said that it had just broken out. If I remember correctly, it had just broken out, made a peak D, and was just breaking out to the upside, and it was holding the 9-period moving average in the weekly chart. It had made a perfect left side, right side price time match in a cup formation. And as I recall, the fast moving average of the MACD in the weekly chart was still very strong. And that's how we left it. And what I said is I had a left side, right side price time match in the monthly chart that said that if certain things happened and if it broke above, I don't think it had broken at that point above the high of the 11th of July, about 53.50. But that if it was to do that, because this chart goes back, I know that I had the chart all typed out so that all this was in place before, and that there would be a left side, right side price time match going to the 59.46, and that at that particular point, I think there was going to be, there was a chance that there was a pullback in United Technologies, and how it broke above 56.16 was really going to be the issue. So now what it's done is it pulled back to the 53.40 level, had a huge turnaround. Now, I wonder if this is not telling us something about the health care bill. It's got something to do with that. But all I can say is that this explosive move from the 53.40 level, breaking out and going to today's high of 59.43, I have to call this leg A up in the weekly chart, in the daily chart. Now, what's very interesting, I could have an alternate count in the weekly chart. I could call this F/B, and I'm going to do that right now. I'm just going to call it F/B, meaning that I don't really have to make a decision as to what it is. I don't actually know what it is right now because the technicals are still very strong. The price movement is extremely strong. But here's the thing. The left side, right side price time match to the high bar of January of 2010, the midpoint from the left side of December of 07, in a beautiful arch formation, comes out perfectly. I want to make sure that it's absolutely perfect. No, I want to make sure there. I don't like to talk about things that are not accurate here. Yep, so let's do that. Yeah, it's one bar later than the exact price time match that I had, and it broke slightly above. It went to 59.43. No, it missed by 3 cents. By 4 cents so far, breaking to an all-time high. I believe this is an all-time high. Yep. No, the all-time high is 64.61. So I'm going to say to you, it's one that you might want to keep on your radar. Why? Because as a potential, and I'd only have to call it a short-term short, because this single leg A to the upside in the daily says it's in the 120 A, B, C, D, E. It's in leg E in the 120-minute chart. It says that we are real close to what could turn out. And I'm actually going to draw this in. Slightly higher high and a range between 57.50 and let's call it 60 and 60. So that's kind of the possible range. If it doesn't hold a breakout above 59.60 in the next 2-3 sessions, but instead it pulls back to 58.60, then I'm looking at it, I'm saying a rectangle formation is going to happen. Now, what I'm going to suggest to you, and this is just, it's such a strong stock, I'd hate to say, I'm actually looking at it as a potential buy because we might have recycled. I've just seen too many monthly stocks. Monthly stocks don't usually have a habit of making this ChapmanWave inside buy signal, this quick peak D and then 2 inside bars and then a breakout, the instant restart. So I've seen too many stocks do that. This really could be leg B and a brand new monthly breakout. So all I'm saying to you is that I'd probably not be looking at this as a short. I'd probably say I'd be looking at it as a buy, and it might be contingent upon the healthcare bill. I don't know, passing or not. But what I would say to you is that 57, if it breaks under 57.30, then it's probably going to go a little deeper to the downside. So once again, I'm at a point on this particular stock that says, in the most immediate time frame, as I think we were looking at then, there could have been a pullback, and there was a pullback, and then there was this incredible breakout. I like what's going on. If you want to look at volume, it's got the volume, it's got everything going for it. I would be preferring on my side of it to be looking as a potential buy, and only if it starts to make a doji next week in the weekly chart where I say, okay, maybe that's going to be leg F and we're going to come down deeper. So I'm going to say to you, I would not be doing anything right now. Keep it on your radar. Maybe not Monday, but why don't you call me Wednesday? This coming Wednesday should be a perfect time to be looking at UNH to see which way it's going to go. Right now it's broken out. I would not be looking to short it, unless, of course, you're looking for a 1.5 day pullback or something. So I hope that helps you.
Okay, that's good. Thanks a lot, Basil.
Thank you very much for calling. Now, let's look at the stocks that I want to look at. Let's go to Apple. Apple is right now at 602.85, and I hope William, who I spoke with on Monday, was it Monday? No, Wednesday. Wednesday I said to William, right now, because on Monday I said to him, maybe I'm getting the dates confused. I said to him, you've got to hold your calls. That's right. Hold your calls. And he held the calls from Monday through Wednesday. Wednesday I said to him, now's the time to raise the stop on I think 2, hold. I can't remember how it worked. But basically I said to him, start exiting the calls, and it would be a perfect time to buy a put. And that put might not work right away, but I see very limited upside at that point with Apple, and that put should hold as we start to get to see if Apple's going to close underneath the 9-period exponential moving average within 2-3 days. Well, here we are Friday, and where did Apple go? It went from the high of 621.45, 621.45, to the low today of 597.94. Doesn't sound like much, but for Apple, that's one of the biggest pullbacks it's had since it pulled back back in the 1st of March. So I'm looking at this. The stochastic starting to come back down. It's at 91%. MACD's turned down. Price is starting to turn down. I suspect that Apple next week might not make a new high bar of 621.45. I'm going to type that in again in the weekly. 621.45. But if there's a lower high bar next week, there's a chance I can call this peak F. Now, it'll only be a peak F if over the next 3 weeks Apple breaks under 543, or at least tests the 547 to 540 area. If it doesn't, but it starts to make a new high, I might have to call that an instant restart from the doji that it had at 526.29 on the 17th. It had one pullback, an inside bar, and broke out. So those are my parameters, and that's William from Singapore actually followed those recommendations because they've worked out very well. But I also said to him there'll be a chance to buy calls again in Apple because I don't think that fund managers are done with Apple. So that's Apple. Now let's go to the next thing which I wanted to look at. And I saw this as well. It was discussed. Oh, there's William. Hi, William. How are you?
Hi. Great. Well, whatever you mentioned, it came true.
Good. So far.
Yeah. I missed the closing of the position because yesterday's the drop below 611 was in the last 2 minutes, so I totally missed it. So I'm now looking, trying to see will it have a rebound before I can, take the profits off the table.
So you are actually still in the call positions.
Yes, because I missed totally because it dropped just 2 minutes before the close yesterday.
Yes.
Yeah, it was
okay.
About 6:11. Yeah.
Okay, all right. Look, you're still doing okay, right? Now, you know what I'm going to do? Let's do this. I'm going to let me go to the chart that has the options in it. So you still have the same options. Let's go. It's Apple. AAPL. Apple right now. You got the 600 calls, correct?
Yes, that's right.
Okay, 600 calls, and now at 4:30. Wow, that was a big profit you had there. But I know, with options, you got to move so quickly with options now. If I can just find, where is the chart? I have to find the chart now. How am I going to do that? Let's see. Okay, so now we're looking at that. I click on that, and I'm going to try to find the blue. Let me get rid of a bunch of things here, and we're going to go through this. So, because it is options expiration, there is a chance that a lot of whippiness can happen. And even with Apple, there's no lock that just because it's options expiration that... Now, let me see if I can find my chart. Oh, I know what to do. Give me 1 second. It's a little bit messy there, folks. I'm sorry. I'm going to go to my Windows. I'll find the one that says Apple. It's right underneath. There it is. Activate. I can't find... Oh, there it is. Got it. Okay. Now look at this. Oh, wow. That's a pity. Because when we were speaking, Apple, you could have got out all the way at 1870. That's amazing how these have moved. All right, well, let's look at this. So A, B, C, D, E. Okay, I'm just going to do this very quickly. Actually, so now if you got out, you'd get out of it at a bit of a loss, right? Or are you still up?
No, I'm still up.
Okay.
Is this a call for April or May?
Oh, you're looking at... Oh, I'm looking at the March. Oh, I've been looking at the wrong one. Yes. Oh, okay. Okay, so March... Where's the March? Did I miss it? There it is. March. We're going to go to 600s. Right there. Oh, okay, trading at 18.
Yes.
Well... Okay, so you see now, you remember we spoke about this a while back, and what I said was that the later month is better because it gives you a little bit of flexibility. It doesn't move quite as much, although this one also went to 26. No, it went higher. Wow. It went to 30-something. All right, so it's not a big deal. It's still in the money. So this is what I'm going to recommend. There is a chance that Apple could pull back. So now, the low today is 15.80. The high so far in the shorter term it's gone to a 19.55. I'm going to make a recommendation that says if you're making money on these options, I'm going to recommend in terms of money management, it's a long way between now and the last day of April, and that's going to be I got my calendar here. This is almost... Okay, let me do some work during the break, and I'm going to give you a strategy for what I would be looking at, and we'll see if I think Apple's made a top at this particular point on the short term for a couple of weeks, you might have to get out. So give me a moment, and I'll be right back.
Sure.
Folks, Basil Chapman, Dow's up 49, S&P's up 4. I'll be right back with William in Singapore.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, folks. We're back. Basil Chapman, last segment, and we're on with William in Singapore. William, I'm going to make a suggestion here. It might not suit your plan, but you think about it. I'm going to suggest that you take your profit now in the Apple, at least in two of the calls. One of the reasons why is because, and you could... I don't know if you want to get out of all 3, but I would say call me Wednesday of next week and we'll look at Apple again. My suspicion is, from everything I'm looking at, is that Apple is going to try to get close to filling in, at least if Apple goes under 606.57, if it closes under that, I think it's going to get close towards that gap. And the gap is at, what did I put down here? Oh, I've written it so many times. The gap is at 575.40. So that's quite a way down. But a lot's going to have to happen for Apple not to reverse course right now, because everything's been done for the quarter, and I suspect that it's going to pull back, and that's where it could be ready for a really strong pop of about 30 points or 40 points. So that's my recommendation. I could be wrong, and you can see by the end of the day, Apple closes at 605 and on the strike price, and by Monday it's testing 612. So that's why I'm saying maybe keep 1. But I would take profits in 2. And maybe Monday I'd be recommending some puts to look at the downside if it closes under the 9 EMA in the daily. But just one close under the... I'd prefer 2 closes under the 9 EMA, and that's at 602 where it is now. So I would still say that there's a chance that some selling is going to come into Apple, and that's the way I'm looking at it. So at least on 2 of the 3, I'd take my profits, I'd get out, and I'd be looking to either have patience to go on the long side. You've done well on the long side, so maybe short is not the way to go. And just for the moment, I'd be looking at taking profits and seeing if there's a chance that you could buy them back a little later on at a lower price, and maybe keep one as a kind of a just in case it really explodes to the upside. I hope that helps you.
Yeah, definitely. But we think that if I were to do a put right now to protect the profits, will it be a good move?
You know, I would not do more than 1 put, because the buyers, the money managers, still, this is their favorite. It's going to stay their favorite for a little while. If it's going to go down, it's going to be really quick and really sharp, so that people can't even get in. If they get in, they have to get out immediately. So it's going to be really quick. So the only way I would do it is if it starts to break down, you just got to grab a put. But if you get out of all your calls, then you're free to think clearly. So maybe Monday would be better to, take your profits and then step back a day to think it through. You don't have to rush. There's going to be time. If Apple's going down to 580, 570 level, there's plenty of time. So don't rush. And even getting out of the calls, if you want to give it a little more time today towards the close, you don't have to rush. You've got a profit, but be ready to do something.
Sure.
Okay?
Thank you.
Thank you so much for calling. And congratulations, at least on a decent call there. So, Basil Chapman here. And just before we sign off, don't forget, I think there's a tape show with Nico DeHaan coming up. And then you got Dave White this afternoon, Tom O'Brien. Now, my service is the opening call. The kind of work that I go through here is what I do for my subscribers. Not always correct, but I do my absolute best. And right now, we're leaning towards a negative bias on the short side. So far, they're working. It's telling me a story. Now, most importantly, the dreaded H today, I had a question in the den. Yeah, the dreaded H says that Apple has to close underneath 602.50, question in the den. It has to close under 602.50. If it does that, then there's a really good chance that it's going to go very quickly to the 597, 596 area. That's just kind of the way I'm looking at it. So that's the reason why I said to William to take his profits. So, folks, Dow, we're watching. If the Dow closes up sharply today, 13,270. Okay, then we can have a little more strength going into the early part of the week. But I'm looking at fairly limited upside, and then some kind of a sideways to down consolidation. And some of the biggies are going to be pulling back. I'm looking at restaurant stocks and automotive parts as being vulnerable right now. So thanks for being here, and I'll be back on Monday.